Hello Crypto Keep. I have this strategy I'm working on and I'm backtesting it. It's giving me a 90% win rate. But the funny thing is losing the money, is losing the whole capital. I don't know how possible this is. I thought if I have a 90% win rate strategy, I should be making money at least 90% of the times. But here I am, the account is getting liquidated with a 90% strategy. I don't know how come, or is it even possible for you to turn $1,000 to $300,000 in 9 days. Hello again, welcome back to this channel. I know many of you are expecting the optimization video, but lately my internet has been very poor, so uploading it is taking longer than expected. At that, I just thought of making this video to discuss something I saw recently. If it is true and genuine that a high win rate strategy can be losing, and also if once your strategy is giving you a lot of profit factor, or is it even possible for you to turn $1,000 to $300,000 in 9 days? Let me start with the win rate. So win rate does not really matter, and then it matters. It's both ways. It depends on how you approach your trading. As we can see, the higher the risk reward, the lower the win rate that needs to be profitable. And the lower the risk reward, like 1-to-1, then the higher your win rate has to be. But how come in a 90% strategy that it's possible to liquidate your account? It's simple, and what it means is trading stop. If in the case of a trade like this, let's assume you have your entry, you have your stop loss. This is 1-to-1, 2-to-1, 3-to-1, 4-to-1, and then a trade comes your way and you get filled in at this point. This is a perfect example. And you get filled in at this point and your stop loss is still here, and then price moves to 1 hour, and the moment price moves to 1 hour, which is at this point, you do not want to give anything back to the market, and then you place your stop loss here, protecting your trade, which means that can be $5 if you are risking $100 on this trade. So if you take 100 trades and then 90% of the times, or 90 of those trades, does something like this, take each 1 hour, then comes back for your trailing stop loss or your protective stop loss, and it takes you out at $5. What it means is 90 of those times that you are taking $5, you are making a profit of 450, right? Then what happens to the 10% of the time that it loses? Because let's say it's a 90% win rate strategy, that means that 90% times, 10% time, which is 10 trades, it's 100. It's your stop loss at minus 100, and that is a deficit of $1,000. Simple. So you are making a deficit of $1,000, a profit of $450. Then you are at a deficit of $550 on your balance. So now this depends on whatever your balance is. But then what if in the case the strategy, like I have this result I was having on the screen before this, it says 50%, right? So what happens if the strategy win rate is 50% and this same thing is happening? Or even trade here, as you can see, it goes to 2 hour, and then if you move from 2 hour to break even, $5, and then as you can see, price just turns back to hit the whole thing. So if you have a 50% win rate, it means 50% of the trades hit stop loss at minus 100, which is, let's say 50 trades, right? 100 trades, that's 5,000. If you have a balance up to 5,000, and then you are taking 50 times $5, that is 250. And as you can see, this has liquidated your account already. So by then the win rate will record as 50% or even more. In this scenario, with the amount of risk, definitely this win rate may be even up to 70% win rate, because you win most of the trades, but the amount of profit you took from those winnings is very small, which is $5 compared to the amount you risk. So that is why sometimes win rate does not matter. So in this case, when you trade your stop loss, what you want to see to be certain that your system is profitable is profit factor. So let's get to the profit factor. You can read the definition of profit factor here, and here it says profit factor above a 1.5 is considered good enough, and above 2.0 is considered ideal. Then he said a strategy with profit factor less than 1.2 suggests too bigger a risk taking for money making, which is okay, which is true. A strategy with profit factor less than 1 will lose your money. That is definite. And as you can see here, this profit factor is definitely 0.9. And what happened? Liquidation. Then look at these two things here. It says, sorry, this particular line. It says a strategy one above is making $400, losing 200, and the profit factor is 1.33. While strategy 2 is making 550, losing 450, profit factor is 1.22. Do you know why this is so? They both make $100 here. 400 minus 300 is 100. 550 minus 450 is 100. So they both make $100 in profit, but their profit factor is different. And the reason is this: this makes more money than this, and this makes more losses than this. And there is a reason that can be the number of trades. It simply means this took lesser amount of trades than this. So because this took higher amount of trade, it's able to make more money, but also able to make more losses. So in this instance, which of these strategies will you go for? This is another thing about what profit factor is good. This side says a crude rule of thumb. Good profit factor is higher than 1.75, okay? But we are not necessarily happy to see values above 4. Not necessarily happy to see value above 4, because once your profit factor value gets too high, it becomes suspicious, and you will see the reason soon. So we want to see higher values than 1.75 because a strategy often yields real-time results. Just pause this and read. But what I want you to pay attention to is here. First of all, it might be a sign you have completed the strategy. And what are they talking about? When your profit factor is above 4. So it says you might think a high reading, which is profit factor, is good, but that's frequently not the case. How could that be? First of all, it might be a sign you have completed the strategy. Note this as we're going there right now. Then too many variables, too few signals, and too short backtest period might lead to exceptional results that are unlikely to work. Let me quickly show you one of these trades. That is gold and Ethereum. Now look at this profit factor is 4.77. But then I didn't fit this. Reason being that if you want to see if I've confitted, look at this to compare equity drawdown to absolute drawdown. But then look at the reason why. Is here the number of trades is 28 trades in 1 year. This strategy is good because it's very straight and it tries to limit losses by taking only high probability trades. So we saw high probability trades of 28 in a full year, and it took that. That doesn't mean it didn't occur losses in some months. Same as this Ethereum, which is 18.15. Will I trade this system? No. Even though it has a winning rate of 91%. That is due to the trailing stop loss, like I just said. But then 23 trades in 1 year is too few for me. This is recovery factor, which is important to some, it's not important to some. It's just net profit divided by mass drawdown to see how fast you bounce back from a drawdown. This is the MT5 platform where you can read everything about that, this testing results, in case you would like to know more. And this is about drawdown. This is where now we want to pay attention. And this means absolute drawdown is explained here, relative drawdown is explained, then maximum drawdown is explained. So just look at this, and everything here is the same as equity. The only difference, as we know, is equity is floating balance or floating balance. Let me put it that way. While balance is your realized profit and loss. So our floating means unrealized. So if you have a balance of say 5,000 and equity is say 6,000, what it means is you have a position open which is making a profit of $1,000. Now let's get to the part where I want to do the debunking. So while going to the internet yesterday, I discovered a site that sells EA, and then the claim is unbelievable. So I shared it in my group for them to discuss, but only 2 people replied. I guess people in my group are not interested in trading, or they are not interested in EA, or they are not even interested in the group. So let's just discuss it, and I want to show you why I think this EA is a scam. Now let's look at those claims. He said the robot performance. Look at what the robots are across different currencies. Okay, you can always pause this and then read. Then here is a full backtest results. As you can see on the screenshot, the robot compounded $1,000 accounts to a whooping $223,000 within 9 days of trading. Guys, that's $223,000 from a $1,000 deposit. Wow. Then it says this is practically and humanly impossible, but they both did it, resulting in the jaw-dropping profits. That's that. Then the second one, it's a $223,000 profits from here within 9 days of trading from a $1,000 deposit. That is where he posted the full backtest results, and we are going to analyze that soon. Then here you can see the full backtest data with the balance drawdown of 0.21%. Please, let's note this. That is where the debunking is. 0.21% balance drawdown, less than 1% drawdown. This is insane. Exactly, it's insane. Any strategy with the absolute drawdown less than 10% is a very good strategy. That's correct. But this bot has an absolute drawdown of less than 1%. Okay, this is also the graph, and from this graph alone, you guys should even know what is going on already. You should know what is going on already. From this chart alone, you should know what is going on without these red lines. This red line means positions which are open got closed at some point. But then let me go to the other one. So here it says another pair, Nasdaq. Here it says full backtest results, Nasdaq US Tech. As you can see on the screenshot above, taken directly from MT5, the robot compounded a $4,000 account to a whooping $91,000 within 4 days of trading. Guys, that's $91,000 from a $4,000 deposit. You can see how this bot can do what is humanly impossible, because as seen above, the robot opened a total trace of 1,700 trades within 4 days. Wow. This is practically and humanly impossible, but the bot did it, resulting in jaw-dropping profits. Okay, then it says here you can see the full backtest data with the balance drawdown of 0.21%. I think that is wrong for this. This is just repetition of the previous one. Who's ready to tell me what's going on first? Now, starting from the top right, please pay attention to that thing I've showed you recently about profit factor and curve fitting. We need it here. And then from that drawdown, this thing you have read, we also need it here. And if you want to catch a scam of a bot, so this is where to look. Look no further than these two, equity compared to balance. Profit factor now is like an intro to see what is going on. People are complaining of profit factor above 4, but here's a profit factor of 1,035.25. Wow. Win rate matters when you are not trading, when you are going for hard stop loss and not trading. I forgot to say that initially. And the total number of trades is 8,000. Wow, 8,016. Wow. So what is going on here? Why do I think it's not genuine? As a novice, if I see this backtest results, I'm going to fall in love with it and put all my money. Carry me, they go. This boat, they carry me, they go. They go. Or any how they sing it. It's convincing because it looks massive. But then let's analyze this. We should learn to show ourselves this as product keeper. Let's analyze what I think is wrong here. Now, like I said, this too is where the main is. Now, look at this absolute drawdown. This absolute drawdown is $13, right? And from that absolute drawdown you have read before, you should know what absolute drawdown is. Then maximum drawdown, you should know what maximum drawdown is. It means the maximum amount in dollar drop, the biggest amount in dollar drop from your balance is just $80. The biggest percentage drop on your balance, maybe from when your balance peaked, so the biggest percentage drop is just $1.36 on your balance. Now, if you want to see if this is genuine, like I told you, or like I'm going to tell you, if you want to cash a scam here, is to compare the balance drawdown to the equity drawdown, because equity is floating, whereas balance is your balance, is realized, equity is unrealized. Now let's look at equity drawdown absolute. The absolute equity drawdown is say $448, which is okay. That is perfectly fine. But then look at the starting balance, $1,000. And do you know what this means? It means you have $1,000 and equity drawdown absolute is almost 450, which means $1,000 minus 448. Your account balance dropped to that far. But because we didn't close the trade, it didn't reflect here as balance drawdown absolute. Now let's move on to maximum. That's the biggest dollar drop. And here the biggest dollar drop, it says, is 137,000. That is random number because at some point it has made profit on the balance. But then look at where it's more interesting. The relative equity drawdown, it says, is 67%, which is very, very big compared to this. And I'm telling you, if you want to see any disparity from what a claim is, if you want to see if something is a false positive or is a scam, this is where you see it. The balance drawdown relative is 1.36, and the guy also claimed the drawdown is below 1%, right? But then look at this, the equity drawdown is 67%, which means your balance dropped almost 70% of its value at some point. If your balance can drop 70% of its value at some point, I bet with you, if that drop started the moment you started trading like this, that means you are losing almost $700 from your $1,000 capital. You'll be sweating, and if you close that trade, then you lose a whole 70%. But because probably some profit has been made, that is why this is showing as this. So that is the first false signal. 67% equity drop down. Wow. It could easily extend to 80%, and then it's approaching liquidation. But then that's not a hit. Now, looking at all this thing I've shown you now, why is this win rate then this win rate? Why is that win rate good like that? It means only one thing. It says this took the trade within 9 days, right? But if you look at the profit and loss by weekdays, we are seeing just one. Also, okay, 9 days is within a month, so it can also be in a month, so that is okay. But this, if it's 9 days, why are we seeing profit and loss on a single day? But then we get entries. Entries are made within Monday, Tuesday, Wednesday, Thursday, Friday. So we have entries being made, which means positions, trades being opened every day, Monday to Friday, is FS market. But this means that all these trades were closed at one point, the same point. And that is getting to where I'm going. All these trades were opened and closed at the same time, which means there is no risk management put in place on this system, which means the moment you open a trade, if it goes against you, it keeps going against you till you close. That is why you have this high equity drawdown. So if you're somebody who likes to manage risk, then this won't be a system for you because you like to cut your losses early. But this bot doesn't cut losses. It just keeps opening the trade till a particular point where either it was manually closed or when the person set it to close. This shows that all these trades that were opened, were all these 8,000 trades, were closed at the same time. And if you look at this again, you will realize what I'm saying is true. these are trades being opened. These are trades being opened. Like this trade now, this particular one on this. I don't know if you can see my mouse, the blue mouse. This is a trade open. This is another trade open. If you were to be managing risk, these two trades would have hit stop loss. Definitely, except you have it way far above. But even apart from that, there are some trades open around this region that price rose up, which might have hit stop loss, which didn't. Even at that, let's look at this far left. We have trades being open at this point, which price then rose up. But instead of closing the shots, it didn't close, it just kept opening more shots. Then let's look at another thing. Okay, if you look at this again, only short trades were opened. Why? Only short trades were opened. It just kept opening short trades. You see how this thing is now becoming so suspicious. This is now the scam behind this. The person probably might have seen in the month of ending February, as we see here, ending of February to early March, since it says it's just between 9 days. So ending of February to early March, that price dropped, probably on a 9 time frame, that price dropped massively between those period of time. And then it backtested or created this bot to take only short trades within those period of time without using stop loss, because he already knows that price is going to drop. Let me do this. Let me show you this. Okay, this is a chart, right? As we are right here, I can see obviously that between this point to this point, price moved up, right? So if I want to backtest, let's assume this is maybe a daily chart, daily from here to here, price has moved up. And if I want to test this thing out and show you that I have 100% win rate system, I can go on the 15 minutes and ask my bot to start opening trades between here and close it at this point, which means on 15 minutes, any move against my trade, I will not close them in loss. Since I'm longing, I will never close the longs. I will only leave them and close everything at the same point, because I have seen that from here to here, everything was good, or even from here to here, or that apart. Let me squeeze this a bit. Good. Now this is perfect. See, from this point to this point, we have some up moves, right? But as I can see, price was crashing from this very point or this very day to this very day. So if I want to curve fit, now this is what they call curve fitting. I can curve fit by, since I have this history, by saying, okay, I want to test just within this period of time, and I'm going to tell the bot to not take profit until this particular point. Sorry, I'm going to put a take profit price point, which will be here, and I'm going to ask the bot to only trade between this very day and this very day, opening only short trades. So every short trade that gets opened will never be closed. Even this drawdown, I will just ignore them. We will not move trade stop, we will not move stop loss, we will not even use stop loss, because I already know what happened. But at this point, everything will close, and I can even trade on the 1 minute, and I can take 1 million trades, and you will see a lot of profit being made. That is what has happened here. A lot of trades were open, they were never closed until a particular point which was not shown. Why? Was there no risk management? And even with this, we can still see that the drawdown on this is very high, which means if you were to be using stop loss, definitely you will lose all these 70%. They will hit stop loss, definitely. And apart from that, this has a risk of liquidation on the day market, because this person is opening only short trade in specific times within 9 days, where it probably might have curve fitted. Then let's look at the second one. And here's the second one, the same thing. Only short trade were taking. The chart for this is not posted. Either this is the chart for that, or I don't know. So here, only short trades were taken within that 4 days it claimed. All the trades also were closed in 1 day. No trades was opened on Wednesday. It's possible. Monday, Tuesday, Thursday, Friday. All trades were opened within different days. Okay, except 4 days. So maybe Monday, Tuesday, Wednesday, Thursday. All the trades were open, and maybe that Friday or maybe Tuesday, they were closed. Okay, this seems to be it. He started trading on, since there is no trade on Wednesday, he started trading on Thursday, he traded on Friday as in the backtest, then Monday, and then Tuesday, and end of Tuesday the trades were closed, hence we see all this. So this is pure scam. This is pure scam. And then analyze this again. Balance relative drawdown is 9%. Of course it will be 9%. This one also will be 3 something, but look at this 2000, look at this 33,000, which is 32% in maximum drawdown, and here is 62% relative drawdown, which means the balance at some point lost 62% of its value. What if that was when you started trading and then you lose the whole amount and then it's liquidated because stop loss is not being used? So you cannot use something like this, which I see as cost fitting. He has probably seen that this period of time trades were going short only, probably because he has seen the high time frame of what happened, and then he decided to just test within that period going in one direction, no stop loss, no anything. So that is why I feel this is not genuine. If you buy this bot because of this result, then there is high probability that you are going to lose your money. I'm not putting the name of the bot there to discredit the bot or something, but then there are many more bots like that. Let me show you some of my backtest results. So here is my own backtest results. As you can see, profit factor is 2.0, but I still made money, and this is because I have losses. As you can see, loss trade, mass losses, that is the risk amount. Risk management was well used there, risk management and also trade management, which is moving trade stops. But if you look at the disparity between the balance absolute drawdowns and the equity drawdown, they are close. They are close. There is not much disparity between them, which means it's a better system. A reliable system. You can see, right? And recovery factor shows how fast trades recover from losses. So that is the difference between when a system is genuine and when a system is not genuine. Because this has taken, okay, let me open this. This has even taken both shorts and long. It's taking both short and long trades. The drawdowns are there. It's test it any time frame, any period you want. It will give you what it is. If it's going to fail, it's going to fail. If it's going to pass, it's going to pass. But I won't give you a system where I have profited to like take long trades where I think, or maybe I go to backtest like this kind of chart. Say I backtest within few days. Let me go on a daily chart. Okay, from this point now, this is maybe 1, 2, 3, 4. I can even say I want to backtest 4 days and then just go on 5 minutes from this point and be opening short trade, because I know from this point, okay, from this very day to this day, I know price has been falling. So what I can do is like what I believe that guy has done is probably go on low time frame like 5 minutes. So I can just go on this chart like this and then be shorting every candle. I wouldn't mind for this because I know probably the amount of balance will be able to carry it because profits are being made. So any drawdown, these are where the drawdown comes. The equity drawdown, where you see those massive equity drawdown, points like this are where they come from. But then I know they are still going to end in profits, and I will open massive trades within that few days and then close them all at this point and show you the strategy is marvelous. It has very low drawdown. So all those things, like Satazo said, they are marketing strategies, which I don't like. I don't know why somebody will choose to give false claims just to make money, whereas you can make money when your system is genuine. This will show you how you also can do some testing to see how a genuine system, how you can find genuine systems, and how you can also see when a system is not genuine. Alright guys, that's it. Thank you for watching.